Shout out to guys, everybody. This is London with Bitcoin Spike. We're going to go through some price action today. This is the home of the VIP traders. You guys know that. This is London with Bitcoin Spike, former hedge fund owner. Not financial advice. You guys figure out all the details, watch the old streams, etc. If you're new, if you want to beat the market, you're in the right place. We'll tell you that. We're excited about the price action right now of BTC at 21,000. Trying to hold that $21,000 range. Wanted to stream just a bit because it's the weekend and we have a bit going on in terms of what I brought you last night. Very interesting. What I brought you last night in terms of the video, the inverse head and shoulders. Now, guys, when I bring you that information, it's so that you can have something to refer to in terms of an inverse head and shoulders, not just the immediate structuring that's ongoing, but the long-term implications, what the definition is. Are we seeing a return to the neckline, right? We discussed that yesterday in terms of that video that I presented to you. So are we going to see another contact down below here along this neckline? We have a confirmation out here to the extent that we would have a specific drop down to that neckline. It would be consistent with the classic definition of the inverse head and shoulders. Shout out to the VIP and the back trading, Venus trading, guys, Anthony trading, of course. I know that Freddie trading, we got to see your trading. I know you're trading. Torque, etc. Everybody in the back, I know you're trading. Jay, appreciate you. Jay Mack putting the digits up. Pathfinder putting the digits up. You guys putting those digits up. It's important working on that level of consistency. And for the crowd that wants to get the answer real quickly and just go on and book their next trade, guys, that's not it. This is a slow, as we go, methodical approach to the market. Vlad, I want to shout out, say what's up, my man. I know you're there, brother. What are you doing? I know you're trading. Bottom line, I know you're doing well, too. Congratulations on your success in the market. Looking at the framework of the descending, this specific descending volume was the big kicker. Guys, you know, this was the big kicker that we were talking about. Let's go to the hourly time frame. Yesterday, me saying in terms of, boom, a launch to the upside. Someone wrote a comment and said, well, London, is it more likely for us to go down or to go up? I had just answered it in that video. What would be required? What is going to be required for us to go up and achieve a reversal? It's going to be volume. Bottom line, you guys know that. And the unsettling thing about volume, and we'll talk about this real quickly. I want to shout out to everybody on the weekend. It's another VIP weekend, guys. We're trading. A lot of trades booked today. You guys saw just right and left and right and left and right and left again, guys. Boom, 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 boom in the back. Right? Nicely done. Nice day. Have a go at it myself every now and then. In terms of the level of resistance, the neckline. All right, the thing about volume that's going to get you is the following, guys. And pay attention because this will, I think, enhance your understanding of the patterns that are in play. People want to predict, they want to project, they want to know where's the price going, period. Right? I want to know. I'm going to put my money in. I'm going to relax. Should I put all my money in? Right? That's the indication when people show up and say, is this the bottom? Right? Is it going up from here? It's like you don't understand the details, right? The details you don't understand is when you're talking about volume. What's the difficult thing about volume? Well, the typically, as you understand, even like on a a flag, let's go through a standard flag formation. You all know this. VIP are very aware of what I'm about to dig into here. Let's talk about a standard flag formation, right? We have the framework. Let me go ahead and make this a green color so we can all see it. But looking at a standard flag, right? Move to the upside, then this downward sloping channel. We know that trades engage up and over the top line of resistance with a confirmation, and then boom, momentum. Momentum comes into play, or the trade doesn't engage. You guys know that. So when we're looking at a trade like this, it's guys, to start with, it's a comfortable trade if you're in from below. It's comfortable. If you're not, it's just like the flag. Guys, it's a situation where you're going to find yourself looking to participate, boom, with the momentum to the upside. It is a pattern. It can fail. We have cross indications from the daily. And let's look at the daily real quickly. Looking at the daily, I want to focus on specifically, and we could talk about the 200 simple moving average. That blue heat map, we covered that 2021 significantly. You guys know that. And it looks like it's blown through that. I haven't been focusing on it as much. It's roughly indicated right now. More so indicated would be the 75% retracement, 75 on the GAN, right? 75 is a GAN figure. just shy, a few $100 shy of the 75th percent retracement, right? We cover both. We cover the Fibonacci. You guys know your classic Fibonacci retracements. Boom, right? 0 to 0 and starting down from 23.30. 850 golden pocket, the 61 to 65th, then the 76 to 86, right? But then we have the GAN. And you guys know we do cover this for the VIP who have been around for a while. You know for a fact, absolutely, we cover GAN. Boom, right? We lay that over in terms of real specificity, the real specificity of all of the price targets included. We're going to be looking at that 786. We're also going to be looking at that 75th. It's an institutional, as you guys understand, it's an institutional level of discount. It's going to be a 25%, a 30, a 1/3%, right? 50% golden pocket, then that 75th percent. We are just off of that 75th percent retracement, period. A discount level, boom, on the macro, guys, on the macro. So very important when you look at the macro situation. When you say, are we at the low now? Where are we going? I'm just going to tell you right now, the questions that come in, I'm just going to tell you guys in terms of, I get the questions that, well, what's more probable? Is it going down? Is it going up? Literally, I just get people asking all the time, is it going down? Is it going up? Traders don't ask that, guys. Traders do not ask, is it going down or going up? We trade. Just like volumes indicated, we're gonna trade the momentum. So let's talk about that as we get into the momentum. Hope you guys are having a fantastic weekend so far. Absolutely, guys. Looking at the lower levels here, the notion that someone would be involved in a market, I'm going to be very frank on the record like this. It almost makes me want to not tell strangers. I'm going to tell you not to tell strangers or anyone where the price is going up or down. Because the notion that you would never have, I'm just telling you guys, the notion that you would never have backup capital for a lower level, that's the presentation. You guys know this in VIP. That's the implication. That's the insinuation when people say, well, is it going up from here? Is it going up or down? I mean, the point is you have targets underneath. Never forget that, guys. Never be overexposed at any higher price. If you're operating in a market, literally, where a decision from Russia tomorrow, let's say a decision or something that would go on with Russia tomorrow, which you nor the market nor anyone else has any control whatsoever, and you want someone to tell you, frankly, yes, it's going up, and you're going to trust that person with a decision from Russia or China or anything else in the world that could drop your investment, boom, to the next level, and you wouldn't be prepared for it? Not here, not with VIP. I guarantee you. If there are targets below, we're ready to hit them at all times. You guys know this. Period. So the 786, we're still off that 786. That 86, we're still off that 86. It would be a pleasure for us to go lower and hit those targets, absolutely. But the 75th percentile is very close. Razor's edge, guys. A couple $100. You guys can look at that in the back. VIP, we covered that. Hugely important. In terms of the MACD, we'll talk about MACD today a little bit because we have some, we covered that in the back with VIP today. I want to make sure that we go over that. And I'm just talking common sense to you guys. And VIP are like, that's the truth, right? Vladimir Putin decides the war is over tomorrow. Oh, okay. Right? I mean, we got a target below. Well, we may not hit the target, at least for maybe a bit, right? Maybe the market surge, everything gets back on track. Boom, incredible news, right? So some of this is very structurally technical, but the technical patterns depend upon some outside influences at times. What we're going to talk about immediately, looking at the bottom of the screen, just on top, and make sure that you are looking at this on a big screen TV. Bottom line. The specific MACD, boom, rolling to the upside. Nice, huh? Nice roll to the upside. You see that positive momentum. Boom, nice carry up. That's nice. Huh? That's real. That's impressive. Now, when did we last see this? We last saw this at the preceding level, right? And how much good did that do us on the daily? The daily is fraught with problems right now on MACD. I think you guys have looked at this and know we have a dip down here in the preceding level. Then we have a nice big trajectory to the upside, right? But the entirety of this specific move here, while MACD is going up, right? What's happening to price here? It's going down. Boom. Okay? So the notion to which I say, or the degree to which your MACD is going to be just the absolute key to the golden goose, right? Guys, we had a huge divergence here, right? It picked up, boom. Okay, but we have, when your MACD is going up and your price is going down, guys, it's just I'm demonstrating this right now because we've looked at a lot of divergences recently, and to the extent that you're going to trade those exclusively, your trading may be problematic. Okay, just may be problematic. Right now we have, I'm going to say we have an interesting, just an interesting note to the extent that we would look at an upward, okay, an upward trajectory on price right now, and an upward trajectory on MACD. Important on the daily, okay, but you just saw the divergence preceding level, okay, and real positions expire, right? They just will. In terms of that, you guys know this. I'm preaching to the choir, but I want to let it be discussed, okay? 4 hourly has been a little difficult. We noted this almost for the majority of the day. We were on top of this 4 hourly MACD. We dug into at least even on the 5 minute to show some coincidence, to show some confluence, right? But this 4 hourly MACD has wanted to just roll over. Now we just saw the daily, right? On the daily, we're looking strong. This is the issue with MACD. Show me a different time frame, and I'll show you the answer you want. Period. Right? You want it to go up, or you want it to go down. I mean, MACD, I'll accommodate it almost on any guys on any circumstance. I say with Bitcoin, I'll show you a different MACD, and I'll get you in a trade. You know, if you want it to go up, I'll show you a MACD right now, and you can get in a trade. Time frame being, and guys, it's that's a legitimate statement about MACD. It is so variable as we're rolling up with momentum on the specific daily. Understand the 4 hourly is rolling down. Okay, so this is, you want to say it's still in the trajectory to the upside on the daily. Well, certainly it is. But due to the divergence that we pointed out initially, it's just, you guys, there's a lot of variability on MACD. Always use it in concert with your other indicators, right? Getting that confirmation. Confirmation is not the movement of price necessarily along a preceding resistance to support. Boom. No, it's a harmonic agreement, right? It's everything in sync and flow. So when we look at the 4 hourly, it means a lot to us at VIP. We're paying a lot of attention to this. Boom, move to the downside, right? As we look at the, and of course, it did follow that nearly perfectly today. I'm glad that we focused on that and the 5 minute as well. Even getting into the details on the Elliott wave function, the 1, 2, 3, 4, 5. That was nice. That was a nice day in the back, guys. Not light in terms of the technicals ever. It requires analysis. It's technical analysis. You guys know that. So looking at the swing feature here from the high to the low, looks like it's on par in terms of the hourly as being non-divergent, showing us in a negative territory now. And it's going to really get specific beyond the hourly. Just to reframe, just to talk about MACD just for a bit of time, not to dwell on it greatly. Okay, same as RSI and CCI. Commodity Channel Index and MACD. Those two features, you're going to need to use them in combination with the rest of the toolkit that you got, guys. With the rest of the toolkit. Now, the number one feature right now is volume. Okay, that's the number one thing that we're looking at in terms of what's the majority of the market participants that they want to what they want to accomplish. What's going to get them there? It's going to be the volume. Okay, that's the bottom line. It's going to be the volume. Descending volume. You see it just tapering off to nearly nothing. We did not get the kick we wanted. In fact, we went up on very light volume last night. You guys know that we went up on very light volume last night, up and out of it in an ascending triangle. And I all but warned, guys. I warned you guys that we had experienced a very dramatic, kind of violent micro ascending triangulation. You guys know we discussed that. We got another one last night. Boom, boom, right? And the nice thing was this. As we look at our standard is not invented, right? It's buy at support, sell at resistance, trade your patterns, and hit your targets. As we look at that last night, it was just it was sweet. It literally was capable of being programmed. I'm just going to tell you, literally, it was a program trade to the extent that you wanted to sell on resistance. Very nice framework. Boom, enter a short, etc. And we got those charts in the back for the VIP. Hope you guys are chilling and having a good time this weekend. Talking about the upward, essentially the question is the following. If you're just tuning in, please hit the like button. Let me know that you are here, and shouting out in the chats is always appreciated. Without a doubt, you know this. Looking at the framework as we are, I'm going to talk about, yes, the upward sloping channel is typically a bearish feature. When is it not a bearish feature? when is the upward sloping channel not a bearish feature? When you're working into a pattern. You guys know this. While you're establishing the formation of a pattern, typically it is a bearish feature because it is assumed between the buyers on support, sellers on resistance, that you will break down. Boom. The buyers are going to be overloaded in this specific framework. Boom. With pressure from the sellers as we attempt to maintain this slope. Okay, that's inherently going to be a bearish sentiment, a bearish, I'd say, structure, to the extent, however, that this would be part of a different pattern. Okay, if we were accomplishing a pattern structure, we could still look at a potential breakout up and above if we were looking at a pattern structure. The only pattern structure that we are potentially looking at right now is some sort of an ascending triangulation. Now, we have fought tooth and nail to get a flat top. You guys know this. We've been trying to get a flat top, and that is indicative of buyers in the market. You know this. Let me hide this mean reversion channel just here for a little bit. I have that in Houston Astros colors. We can put it in Yankees colors. That's cool too. I'm a Yankees fan. They're both doing well this year. So looking at the it just comes in those colors. So that's the routine. So this was a nice hit to the upside. It was almost a flat top. Okay, almost a flat top. And to the extent that it's overshot, again, it just is compounding to the frustration that we have in terms of not being able to establish, I'm going to say, seller control. Not seller, but really establish, I'd say, advantage over seller control. What we're looking for is the presence of buyers unequivocally, establishing their presence and providing us with, I'd say, the foundation or the formation, i.e., all we want is an ascending triangulation. To the extent that we're looking at a problematic, and we're going to discuss this because we talked about it in the back. We'll go over it again today. I want to make sure all the VIP know this. We discussed the requirements of the inverse head and shoulders. You guys know that, the inverse head and shoulders. We've been buying, we've been selling, guys. We've been doing a lot in the back. I don't know how many trades you guys do today between shorts and longs. It's been a long day. I booked 7 trades today. So I'm still streaming, okay? In terms of that, I want to talk about the specific requirement here is that we would have a slightly angled, and you guys know this, we'd have a slightly angled neckline, very important, slightly angled neckline. Now, when you hold this up to textbook, when you put it up to the parameters for like institutional, well, I'd say an institutional review, right, that caliber of review, this has quite a bit of an angle to it. We all agree with that. I'm not opposed to what we've discussed in the back, and I'm just going to take my time going through this information, guys. I know that we're trading, etc. If anybody has to jet or do anything else, that's fine. If you're looking for quick answers right now, I'm going to take my time and not sweat through this, okay? I'm going to bring you as accurate in terms of the technicals, because some people will want to watch the entirety of this and learn and further their understanding, while other people are looking for the next answer. Most of the time online would be the wrong one. So if you can't develop the answer yourself, it's, in my opinion, it's always going to be the wrong answer. Okay, if you can't replicate the trade yourself, if you can't do the TA yourself, that's why we spend more time. That's why I don't always just hustle and blister through this. You guys know this. I want you to learn to be able to do the TA on as much of a pro level as you possibly can. Right? That's the bottom line. I mean, heck, we use pro materials, so bottom line. There's no reason those guys should beat you guys. We had that discussion yesterday with all those qualifications, etc. So, to the extent that we're looking at a somewhat of a pennant formation, we have flipped this multiple times. I won't do that because I lose everybody's attention. Okay, but looking at this specific structure, it's not a perfect pennant. There's a big overshot here, right? A big overshot here. So in terms of this really lends us to this leading diagonal, which we started with, which in terms of classical TA, it's going to trump the specific bear pennant function. Just is. Okay, it's going to trump that specific bear pennant function. All right, and you would agree with that if I were to flip this just for a moment. I will. Just look at this. We need more of an upline structure. Boom. We need a stronger hit than that consolidation, right? If we're looking at a specific pennant formation. It is noteworthy, however, just in the context of the triangulation that is presented to the extent that you would want to regard that. Typically on any type of a pennant, what makes a pennant powerful is the specific momentum that it drives. Okay, looking at this in terms of, and let me find my my scuba mask here. I always say scuba mask. The what is that? The polyline, right? Where's the polyline? Should be right here. Boom. As we look at a pennant, boom, to the upside. Let me double click on this, make sure that we get color that you guys can see. And let's look at this and get on to green. There we go. Okay. Now, as we look at a pennant, what's required, right? We want a strong move. Bam to the upside. Boom to the downside support. Bam to the upside resistance. Boom, downside support. Bam, bam. We want this thing cranking and boom. That's what we want on a pennant. Strong hit. Bam. Into resistance. Boom. Support. Resistance. Support. Resistance. Support. We want this just hitting down. Bam. Straight line. Power. We kind of soften up around here. This is the problem with looking at this as a unequivocal example of a bear pennant, right? So to the extent that you guys are familiar with such, or not just pay attention to the notion that this is defective, as you would look at this as a continuation pattern bear pennant. And let's see what we got. If anybody wants to shout out in the chats, let me know what you guys are up to. I'd like to know that you guys are trading, that you're focused on your trades. Who's focused on their trades? Who in the back is focused on their trades? Give me a shout out in the chats. I would appreciate that as I go through the details here. And some people may just be, I don't know, it's weekend, whatever it is. I don't know. When people don't want to listen to TA, I just don't get it, man. It's just the way it is. But for the mass drove of normalized trader that's going to go and lose all their trades tomorrow, why should I break my stride? I should not, nor should you. So to the extent that people want to show up, get an easy, quick answer, and they don't want to spend the time, do you guys imagine what it is for me? I have to stream. I have to sit here and sweat and hustle and talk quickly and accommodate people who want to go and not spend the time, not invest time in winning. Man, why should I break my stride? On with it. Get on out. Period. We are going to take our time. We're VIP. So this stride will not be broken, period. Let them roll on. It's a competitive business in terms of driving interest, in terms of, I'll tell you this, in terms of educating people who want to become good traders. Man, I've dealt with them all, guys. People who become incredible traders and people who cannot focus enough to find a good investment. I'm telling you guys, they're from point A to point B all the time, not just on BTC. They want the answer in 20 seconds, 15 seconds. That's it. And I'm like, man, you're spending enough time to make sure you don't even know what a good investment is at all. Just gone. I will not break in. Some of you guys know who I'm talking about. It's just it's almost like an internet crypto sickness, investment sickness. So I'm glad that we don't have that problem at VIP. The bottom line, guys. So one of the most encouraging signs that we have right now would be this feature right here. That's a nice pattern, okay? Close to a flat top. That is within threshold. You guys know that. That's within threshold, right? And level of support ascending, flat top resistance. That's sweet. Okay, that's looking good. That looks real, real good. We just need what? We need to omit, once again, we need to omit the specifics on the 4-hourly chart, okay? We just have to do this again. And we got through this yesterday. I was a little bit concerned about the 4-hourly chart. And it's just, it is what it is. In terms of having to rely upon the hourly over the 4-hourly, you would think, well, that just means we need to rely on the candle wicks. If you don't know the difference between the line chart and the candle wicks and how you need to make them interoperable and how you need to synchronize them, guys, you're doing yourself a huge disservice. That's like not knowing what a liquidation is, right? It's not, I mean, honestly, guys, if you don't know the difference between the candle wicks and the lines, you got to get into that in 2022. Easy stuff, but you have to know how to synchronize them, without a doubt, guys. So, again, this is, I'm going to say, the best framework that we currently have. And again, it's the hourly chart finding its way to us. Nice flat top. If you are VIP in the back, you know where's the sweet spot, guys. Where is the sweet spot? Let's go and find our specific. Let's line it out with a pitchfork. We can do it with the generalized rectangle zone, etc. But I want to show you, as people looked at trading this, and this is what's going to be a little bit tricky about this specific move. If we can focus on, let's just say, if we focus on this specific move as opposed to as opposed to, let's get the pitchfork. I like the pitchfork because it lines things out with a kind of a top threshold, midline threshold, and a bottom threshold. Okay, as you look at a sweet spot in an ascending triangle in terms of trading it, you guys know I went over this yesterday in VIP, and boom, that small one, bam, right at that level. This would have worked out just quite nicely. You guys know that. Okay, level of support, level of resistance here. Now I understand that we still have, and it could function together quite well as we look at a synchronicity, some sort of a synchronization between the pattern in play, the specific, and this, guys, I think you'll agree is nice, but the inverse head and shoulders, right? What could get this buyer attention and really kick things into gear would be the ascending triangulation, right? Establishing an ascending line of support here. So to the extent that we're going down to this preceding line here, I would also pay attention heavily to this specific level of support along this diagonal. Okay, now this gets the attention of, and it's very interesting and very important, guys. Please pay attention to this, please. It gets the attention of the bulls. Okay, it's also going to get the attention of the bears. Why? Okay, because we have the amplitude of the inverse head and shoulders. We have the potential move to the upside. This is crucially important. Congrats if you've stayed through the stream thus far. These are the types of things that up your trade game, period. Looking at the amplitude of the inverse head and shoulders, right? We're going to measure that and compare that to the amplitude of the ascending triangulation that could also be in play. Boom, right? So yes, we have the classic to the left possible levels of resistance. But what is more dynamic right now would be the specific amplitude after the first pivot into level of resistance to support. We need 2 hits. You always know this on an ascending triangulation. Hit 1, hit 2. Hit 1, hit 2. We need 2 hits. Don't count this hitch in here as a hit. We need hit 1, hit 2, and then it's going to be the second set, hit 1, 2. So 1, 2, 1, 2, boom, up and out. Then what are we looking at? Completely different framework than the specific and a separate breakout, honestly, a separate breakout level, which could frustrate not only the ascending triangulation, but also the inverse head and shoulders. Very important. There's a drastic difference between the two in terms of the target to the upside. Let's go ahead and measure one target, putting us up to that 23.8, about a 10% move. It's a nice move, 10% move. The second target is over 17%, 3,700 to about 25.4, 25.5. So that's a big difference. This is the complication we're looking at right now. Zero question about it at all. This is the complication that we're currently looking at to the extent that bulls want to charge in, and I'll say also to the extent that the and guys, they've been around. They've just been on very low volume. So to the extent that there's this will attract some additional attention, I would expect that this would attract some more attention and buying pressure than kind of a lazy looking, really steeply angled, and even, I'm going to say this, guys, and even a kind of cross-diagnosed pattern, technical pattern. We have an expanding leading diagonal wedge here. Okay. That was what we were into earlier on. That was ingrained into the mind of the traders, descending line of support, the descending and the broadening formation in terms of line of resistance, right? That broadening formation was there. We sculpted it into, traded it into after a nice pickup here by VIP in the lower end, guys. You guys traded that very well. In terms of that inverse head and shoulders, just kind of a little bit, it's a little bit lazy. The further that you go down with any neckline, just to let you know, the less respect it gets amongst top traders, guys. It's institutionally, it's frowned upon. A slight angle is nice on inverse head and shoulders, but the deeper you dig down, right? So we have a bit of a slope here, right? A little bit of a slope issue there, and the kind of the cross diagnosis, right? Or what we say, just cross framework or cross interpretation, we'll say, in terms of the technical pattern from that expanding leading diagonal wedge that really saved itself in terms of powering up and over into the inverse head and shoulders, right? That has now formed a third pattern, being that ascending triangulation. Very important, right? Very, very important. Okay, that we would pick up on this, that we focus on this, and that in the back you guys have heard me continually let you know that these are some of the strongest patterns that we like to trade. Period. You guys know this. So this is a huge gift from the market. What makes it difficult is the following, and you guys already know where we're going with this. What makes it difficult is, and I want to start on the 4 hourly. Now look at the amplitude carry, a very basic structure, right? Longs are going to be excited about this one, okay? Just bottom line. Shorts are going to have some opportunities to hammer in just above this line of resistance. Let's go through the details. Now on the specific hourly framework, we're going to be looking at this specific line of resistance across the top. You guys know it's going to be difficult. We're going to be cut off very quickly, guys. On launch, we're going to have a level to beat in around. It's nicely confluent with that 200 simple moving average, right in that zone. Level of resistance, that 22,410. Okay, now looking at the framework of the 4 hourly. Let's go into the 4 hourly. This is where things get a little bit more tough, guys. Okay, the perfect ascending triangulation theory on the hourly crumbles, right? You guys see how important it is that when you tune in, you actually stay tuned in for a minute. I mean, people, it's just odd to me. I just know they're not real traders. I don't know what they're looking for. Maybe some people may just be looking for hope, right? I don't know. Maybe they own from way up high and they're just tuning in. Maybe they're in a rut. I don't know, right? But I know they're not trading. VIP trade. VIP want to know the time frames. And so I really try and dedicate a lot of this time to you guys. I really do. As much as I might add in or throw in a few personal regards, etc. I really try and make this comprehensive for you all. Okay, as much as permissible, as much as time permits. So herein lies the problem. Okay, you guys get this. This is a square in your face, just absolute issue with Bitcoin right now. If you're not regarding the specifics on any type of an ascending wedge, then you're not trading Bitcoin right now, guys, because she's been so darn consistent on wedges. My gosh, guys, the number of targets that we've hit based upon wedges has been phenomenal. From the $30,000 range, unbelievable in this range, like 100% level until the fallout, 100% completion rate. It was just, you guys know that. When we get into the targets on the 15, 5, and 1 second time frames, by the way, you need to zoom out. I'm going to tell you, generally zoom out. You can book a lot of trades down there. You can make some cash, but generally zoom out and understand. Always keep in mind I'm on the 5 second, man, right? Price can be a little chaotic down at those levels, but that's some of the best levels to trade. You guys know that. So the 4 hourly is, as a matter of fact, a problem. Period. If she decides to continue her momentum to the downside, without equivocation, we're going to have an issue. If momentum continues to fall and we breach into real negative territory on the MACD. Now, the thing that's got everybody interested is the RSI on the daily. RSI on the 4 hourly, guys, has been low. Okay, you all know that we hit a real just kind of literally, guys, a deep dig on RSI on the 4 hourly and on the daily. You all know this. And to the extent that we see that as a means of acquisition, right, as a means of reversal, I'm going to challenge you on the following. Please understand this and please let this register. If you trade, you know what we're about to talk about. Continuation versus reversal expectations on the RSI. You guys got this. MACD looking positive. Guys, it's looking like it's rolling to the upside here in terms of the specific daily. We discussed this earlier. Now on the specific RSI issue, it is a momentum indicator. Okay, so when we see RSI heading into oversold territory, that means, guys, and you can do the data extrapolation on this, we're into oversold territory, right? It's a momentum indicator, and that means that the sellers are in control. They've established control. It's a momentum indicator. So to the extent that you're looking at RSI as a reversal indicator, I challenge you to look back at your own data set, at your own charts. How frequently is it that, and let's go here real quickly, guys, and I'll let you go there. In terms of on the way up on a bull run, you're overbought. Then what happens? Buyers continue to buy, and they continue to buy, and they continue to buy. It's that momentum indicator, right? The continuation of overbought status, right? So when we're in oversold status, the whole market's looking at it as a reversal. And that's a momentum indicator. The sellers have momentum. It can be a good pickup. It can be that maybe one out of 3 times or so, right? It's not, depending upon who you ask in the real data, it's not even just a split 50-50. Majority is a continuation, not a reversal. Okay, in terms of the hit of the RSI down into oversold, right? Oversold sellers, they continue to sell, right? So it means that they have the power in the market right now. We've discussed on the hourly the best pattern that you currently have, and it's a nice pattern, guys. I'm going to tell you, I trade ascending triangles a lot. I trade them a lot, guys. It's one of my favorite patterns to trade. You guys know this flat top resistance, ascending line of support. I love it. It's beautiful. Nice pattern. Thank you, Bitcoin. Looking nice. And I want to shout out because Bitcoin's been a little quiet today. Who's booking trades? Guys, we're booking trades in the back. You know this. Big time, huh? Big time. If you don't know how to trade on low price movement, guys, you got to get to it, man. You got to get with it. It's huge. It's hugely important for your just for your operation in the market. You got to know how to trade these slow days. These are some of the best trades. You got a range going, right? Bitcoin loves to range. She loves to carve like this. If you're not in a position where you understand how to trade this, guys, this is a range function. This is really nice trading, right? You guys know this. Don't sit there and wonder and think, well, maybe I could trade that. Maybe I could, hey guys, maybe you're going to make a book a trade for 10% or 50%. No, guys, come on. Come on. Step it up. It's 2022. We want you to learn how to trade. Bottom line, right? If you haven't dealt with leverage at all positively, I'll say if you've dealt with it and you haven't dealt with it positively, learn how to book trades. Go through 100 rounds, right? That's VIP style. And congrats to all the VIP who are going through 100 rounds. It's going to make a difference. I know it because I see the difference it makes in the traders. You guys are doing very well thus far. Nice to see you working on your levels of precision. So the hourly, boom, top level resistance, ascending level of support. The buyers need to come in. We just need to protect against a swing failure, guys, always with the caveat on the hourly, okay, with the warning on the hourly, okay? So this specific level here, we need to not go below this level. Swing failure would be boom. All right, a lower low. We don't want a lower low. We need buyers to march in and establish a higher low. That's the definition of swing failure, essentially. You may know this stuff. If you don't, hey, good we're talking about it. Some of you guys are brand new. Literally, some of you guys are brand new to trading. That's important, right? In terms of the framework of the 4-hourly, I'm just going to tell you once again, it's problematic. Bottom line, it's expected to start with. Let's talk about something good in terms of bullish expectations. It is expected that we would, and on the 4-hourly as well, I'm going to say this is very interesting on the 4-hourly, guys, because it's expected on the 4-hourly on an inverse head and shoulders that we would recontact, and listen to this, guys, this is not me saying this. This literally like where Wall Street goes to school, literally New York Institute of Finance. The expectation would be a hit back on this level of prior resistance as support. Now, would this qualify here? You can look at the examples. You tell me what you think, guys. This level is loaded up with orders right now. Absolute longs are just ready to roll along here. You guys, in this 20,000, 20,500 zone, period. It's loaded with orders, bottom line. So to the extent that we would expect this in terms of classical TA on the 4-hourly, it really has a deeper dig down into it. We've had variability between the hourly and the 4-hourly on this top neck line the entire time. What that means is the 4-hourly would dig down a little bit deeper into a confirmation play upon prior resistance to support. Boom. Very important. And I hope you caught that. I know that you most likely did, but the bottom line is that 4-hourly line is tucked lower. Okay, it's lower down. Thus, the push down to this line, if these orders are to get picked up, guys, if they're to get picked up, looks like buyers are doing a great job right now. We just need an ascending line of support here. However, if that 4-hourly governs, then you're looking at a lower line here than you would be looking at on the hourly. So to the extent that 4-hourly governs, you've got an extra gulch in here. Don't schedule your orders in necessarily on this line on the hourly without checking in on that 4-hourly. Be prepared for that backup level. Copy that, guys. Yeah, absolutely. Important. Very important. So that's where we're at in terms of the need to pick up, the need to regard that 1-hourly. It's just crucial. Guys, it's really, really crucial in terms of that. And I will make a quick video for everybody, for all you guys, because I know people are busy. It's the weekend. It's a Saturday night, and I know that we're trading. We are always trading, guys. That's the mantra. That's the MO of VIP. And I can tell the people who are doing well. I have to shout out to the people in the back, guys. The people who are doing well in the market, there's a handful of them, and they're VIP. They don't care about other stages. They don't care about anything that doesn't make sense to them, that they can't really compute, put their hands on, and agree, no, this stuff is the real stuff. I want the real stuff. You guys aren't in a rush. You're focused. And it's nice to, because I'm around a lot of traders, guys, and I see them come and go. I see a lot of them talk a big talk and walk a real tiny walk, right? And you guys you're walking the walk, guys. You're talking the talk and walking the walk. It's nice to see that, and it's you got the market. I'm going to tell you that. All right, the market's going to be here, and you got it. I'm going to tell you guys that in terms of the market, I understand the time you're spending, etc. And you got it, guys. You got the market. You're doing what it takes to get into it, to dig into it, and to beat it. And that is a good equation. Period. That's a real good equation as you look at how to better yourself in the market. I mean, you got it right now. It's in your hands. It's in your mind. You understand it's in your conviction in terms of what you're going after and what you're going to do, guys. It's going to be impossible for you not to succeed, guys. If you refuse to quit with that equation, it's going to be impossible for you not to succeed. Boom. Like, get your goals together. If you want to book 4 positive trades, you guys saw some of that in the back today. Make that your goal, right? And we're excited about VIP. We want to let you guys know that we'll be streaming, guys. In terms of any type of other indicators, etc., we invite you to join VIP. That's our top-level trade group. We have some of the best and have had some of the best literal crypto traders, bosses of crypto, have been in through our walls of trade group, just to let you know. And what I'll say is, in terms of the space here, it's reserved for VIP. We are trying to not just provide a signal group, just so that you guys know, and not provide quick, easy answers, etc. We're trying to develop traders on a pro level to the extent that that's possible in the context of YouTube, etc. We're doing that by providing means to at least starting. I'm going to say this, just starting with the means to the pro level. I'm talking pro level materials, guys. It's not what you found on the internet. It's not and it's not fair to really judge other people who haven't had exposure to New York Institute of Finance materials. Bottom line, it's not really fair. So we provide exposure to that so that you know that our VIP are given that. John J. Murphy, Principles, Technical Analysis of the Financial Markets. I invite all of you, whether or not you're VIP, to look into that book. That's the #1 book, guys. Okay, it's not maybe. No, it's the New York Institute of Finance published book. You'll rarely meet someone who knows what book is really important. It's John J. Murphy, Technical Analysis of the Financial Markets. Make sure that you have that book. Okay, start to gauge things at an institutional level with the New York Institute of Finance, founded by the New York Stock Exchange in 1920. Okay, 100 years ago, by the New York Stock Exchange. The New York Stock Exchange, like $16 trillion New York Stock Exchange, right? 16 trillion, right? Around since 1790 or so. They know price action. Okay, they know in terms of targets. Since 1790. They know what an inverse head and shoulder is. They know the likelihood of it returning here. Where to stack your orders. How to cover the question. And the most important thing that we always get is it going up or is it going down? Man, what's the best way to go to bed at night, guys? With orders below. You guys know this. What's the best way to go to sleep at night? Period. With orders below. Period. Right? And I don't think VIP. I don't think that we will really connect with the crowd that wants to know, is it going up or is it going down. I just, to divorce ourselves from the equation of, like, needing volume was the big thing yesterday, right? I still had people on the tail end of that video asking, well, is it going to complete to the upside? Is this it? Is it going to complete? I'm like, man, I just made a video, spent all the time, the research, took the photos from the book, etc. Said, we need volume. Right, we got to have the volume come in, and people still. It's just like, I don't know. It's like a dry erase board. You just erase it every 2 or 3 seconds, and it's another question out of some people's. I don't know. And I should say this. That's concerning to the extent that there's not a real solid, coherent framework for people to trade with. Guys, there's not a coherent framework for people to trade with. The whole online, and you know this, VIP, you'll agree, there is a deficit, there's a complete dearth, an absolute scarcity of a coherent framework for the traders to go after, to solidify and incorporate into their lives. A lot of people are trying to do this for potentially a living, at least on the side, successfully. There's no coherent framework anywhere. And so we get to spill off from that a lot of times, but we don't have that in the back. And I'm going to shout out to you guys now because that's a huge, huge feature in terms of VIP, and I appreciate that very much. Is you guys have that coherent framework, and you're making a lot of progress. So that's really important for us to I just say what we say, just comment on and recognize, and yeah. So, and I kick people out of the room every now and then. I just do that if they comment or whatnot. They don't belong. It's VIP exclusive. It just is. So if we we invite everyone to join, but the people who want to join, the people who want to be good traders, they join. The people who don't want to be good traders, they don't join, right? That's just the bottom line. That's the way it works. We see that because there's a lot of quality in terms of the TA level, and there's no hesitation. I don't have to ever ask someone who wants to be a really good trader. I don't have to ask them, hey, are you joining? Like, I don't have to pull out the salesmanship bag to talk to them about them needing to learn what the pros on Wall Street that they're trading against are going to be using. And like it's a no-brainer. Literally, it's a no-brainer. So for the ones who act quickly, who hit the button, who make things happen, who want to trade, it's a phenomenal market. We're having a great time. We just are, absolutely, and we will let that resonate in the halls and walls in terms of just making the decision to be competitive. Some people can't make that decision. That's unfortunate. However, it is the market, and we know this. It is the market. So that vast majority of people who've chosen and continue to choose not to be competitive, unfortunately, they're going to lose. You guys know this. That's the group that's going to lose. And it's just when you're confronted with that and they seem like they want help, they seem like they want the answers. They couldn't sit in a room for 5 seconds, literally, or 10 seconds or 20 or a minute. They couldn't sit here for a minute to get the right answer. They couldn't. The majority, and you guys know this, you encounter this. If you're one of those people, guys, reprogram. Literally reprogram. Do you have the framework to beat the market? If you don't, and you're not beating the market, what does that mean to you guys? And you're still in this rush. I got to go somewhere else. Got to look at another answer. I got to find. Guys, are you beating the market that way? If you're not, change the equation. Change it. No one else is going to change it, but you have to make the decision to change it. And I bring that up for VIP. We are solely, exclusively, guys, just hammer line focused on solid TA. And it's never going to do you any good to go hop around and try and find the right answer online, ever. It's never going to do you any good, guys. Period. You have to be able to harness in your skills, your TA, and create your own chart, right? You need to be able to be the one with the right answer and the right approach on your participation in the market. Until then, guys, you're a fly on the wall. I'm going to tell you, you are a fly on the wall and so disposable to anyone else you want to plug into. I promise you. I absolutely promise you. You are a fly on the wall. Absolute, just of such little regard. If not, I'm going to say a potential nuisance in terms of the classic approach to influencers, etc., and just gurgitating out some kind of a response to you. You need to have that framework, guys, and that's what we're really committed to in 2022. When I say we're building, guys, we're building our trade group. And that's the bottom line. We're building a trade group of individuals, and we have it right now. We're going to continue to build it. It's my goal in 2022, along with teaching leverage. I want to teach leverage to people to be able to conquer that in 2022. I'm determined to do that. We are doing that. We're going to continue to do that in a solid framework, right? In a solid way. Amidst all the criticism that I get, oh, you're teaching, I've had people, oh, you're teaching, just guys, you're teaching leverage in a bear market. That's the worst idea I've ever, like, dude, can you short or not? Do you know what a short is or not? I mean, how many 1,000+% trades did we have in this zone? How many 1,000% trades, 10Xs have we had here? Boom. Case closed. Case closed, right? How many 500% trades, 5Xs have we had in that zone? Right? Case closed. Case closed. Right? And exposing yourself to this type of it's just a new way to participate in the market. If you don't know about it, it could be anything from, honestly, guys, it could be anything from scary to just an absolute mystery in terms of just the unknown, right? It's just not, it's not anything you cannot figure out. I know that for a fact. I would just say that for an absolute fact. It's nothing you cannot figure out. We're here to help assist you guys in that endeavor. So what we're talking about, we're looking at a nice pattern formation. right? We know how to play a breakout trade without a doubt, right? We know how to play this breakout. We know the 4 hourly complications. You know that, and I try and give you guys a little bit of a pep talk because you guys, you're the ones that are capable of receiving it. Not everyone is capable of receiving the truth, right? And a lot of times that truth is they're losing in the market. They have bad resources for their TA, and they're going to continue to lose in the market because they're going to continue to have bad resources in TA. And then 2 or 3 years later, I hear this all the time, 2 or 3 years later, or 18 months later, then they're going to decide to get serious. Like, what? Do what? For 18 months, you're gonna do the wrong thing for 18 months? Come on, get the answer going, right? Get the right answer going. If the equation's not working for you right now as a source of inspiration, I want to encourage you, right? Get some real materials. Start to go through the real materials on your own, right? For all the time and all the hours that you spend looking at the charts, all the time you spend looking at the charts and trying to find the right answer, etc., start investing some of that time in real materials that you grasp, that you have the understanding of, that you don't need to look at another influencer, guys. If you don't even look at me ever again, great, perfect. Go find the answer within you guys. You go make sure that you can develop that powerhouse regimen and that powerhouse approach to the market. Bottom line, that's my big hope for people that just stop by and they don't know what VIP is. That's the bottom line. So I don't blame them at all. But it's just, it's difficult dealing with the mass public that doesn't have much regard for their own participation in the market on the whole. And we would like to help change that in 2022. That's one of our goals. So this hitch is in play. You guys know on the hourly, it's a nice formation. Just be aware, guys. It's going to take I always say it's going to take a kind of Hiroshima event with some big time volume, boom, to the upside. And I just want to encourage all the VIP. You guys are rocking and rolling. You're doing a great job. All the members who want to upgrade, guys, it's just because we care about you. We want you to do well. And that 100-round framework is doing really well. It's nice to see you guys booking trades. Price does not move. Guys, you know this. Price does not move other than we see VIP trading. That's what's up, guys. That's what's up. You're catching the moves. You're catching them. And a lot of these aren't. They're not. I always say they're not just. They're not simple moves, right? They're not simple moves. You've got the consistent push between the bulls and the bears. You guys know this. Let's look at this specific move. Difficult move here, right? What was this? This was a descending triangulation. Don't you know that, right? Descending triangulation. Look how tricky she gets. You guys know this. What was it? Torque. Shout out to No Torque. Yesterday he says, Bitcoin will literally drop kick you if you are not paying attention. that was funny. Torque, you nailed it right on the nail on the head, right? So looking at the framework here, a very difficult pattern to look at, right? Because this was a descending triangulation. We had an amplitude move to the downside. You guys know this. But what this does is this prepares you, and you would have been prepared for this, I'll tell you, if you had traded the descending triangulations recently, because with somewhat of a frequency, we've seen the descending triangle catch, boom, take out the shorts, and boom, move back to the upside. You know this happens, right? It's Bitcoin. So as we as we just rescope today, I want to let you know, and I know it's Saturday night. Normally I'll just tell people like it's a Saturday night. You guys go do what you want to do. Go have a good time, right? It's go out, go have fun. If you're not trading, or if you are trading, just you take that however you want to. But I always like people to have a good time on the weekends. Nice pattern structure on going difficult, tricky trading, right? You got to pay attention to BTC. You'll hone in on your specific patterns that you trust the most, your time frames that you trust the most. When you get confirmation, right? Maybe you've booked 4 ascending triangles in a row. The one last night was beautiful, right? That was a nice kick to the upside, right? When you continue to book positive trades, note the patterns that you're on. Note whether or not you're having success on whether or not it's support, right, or resistance, if it's a long or a short, right? Either it's support or resistance, respectively. And know if you're hitting your targets, right? All of that comprises itself into a really good equation in terms of what your strategy and your ultimate advantage in the market will be. Just the ascension here, as we look at the different time frames, it's plaguing BTC right now. 30-minute is not bad. Now that's important, guys. The 30-minute is not bad right now. This specific 30 minutes almost flat. The 30 minutes almost flat. The 1 hourly is nice. So the 30-minute is nice. The hourly is nice. That's 2. That's nice. That's important. as we would look at can we find confirmation, right? Confirmation agreement between all the time frames, hugely important. You guys know this. And we're going to need to be ready for a play in this zone, and just understand the following. It could be tight. If you're looking to go long in this zone, just understand that you've got a few hurdles just up, okay? You have a few hurdles just up above you. Getting a lower position. Look at this one hurdle. Bam, guys, just on breakout. It's going to be tough. In terms of establishing a lower position, if you don't already have a lower position, right, how would you go about establishing position, right? Because you will on this. What did we have that is a nice framework, nice key signal here. As we looked at the descending triangulation, what was the tip-off to you guys potentially that we might have been moving up? And just potentially, guys, what was a potential tip-off? As you look at this pattern here, how would you know that you could have a problem moving down? I'm going to say this right here. This right here. Boom. The angle to the upside. We have seen a lot of, and you guys know this, yay, VIP, you're like, yep, you betcha, right? I know you guys caught that in the back. Some of you did, who've been paying a lot of attention and been watching this. Anytime we see a flat bottom support, ascending line of resistance like this, these have been wanting in and of themselves to traject, boom, to the upside. We've seen this frequently. Pay attention to your patterns. They're crucial. When you pay attention to your patterns, it's going to be reflected in your trades, guys. Looking at the specific ascending line of resistance, we've seen these want to hammer and go to the upside. So we did fake out to the downside. I'll let you know that the depending upon the time frame, we also had a level of support that was a bit angled. We could pay attention to that, but do pay attention anytime you get the specific level of resistance internal within a structure. Just note that, please. Very important. Okay, we've seen a lot of those plays, pardon. And you'll notice, you'll start to notice some of these kind of clues that the market will drop on you. You guys know that in terms of kind of an indication, okay, there's an ascending line of internal resistance here, etc. We've just seen a lot of the flat bottom support, ascending lines play to the upside, so I'm not surprised to see this descending triangulation not work out 100%. When we go over all of the details in the back, okay, when we're going through the pattern formations, you know, someone said this last week, okay, so basically you have a signal group. I'm like, man, heck no, apologize for that. That's the truth. We do it by a level of focus and diligence on the micro time frames. We trade the micro for information regarding the macro. If there are 50 descending triangles, so as Anthony, Luke and I have done a lot of diligence in the background looking at different patterns and the advantages that the patterns have and they represent to VIP. And I just say to the market on the whole, but yes, to VIP, right? That's why we spend so much time in the back. And it's not all just a signal. It's not a point and buy club. It ain't, guys. Never will be. You know this, right? It's understanding the framework of technical analysis, okay, at the top tier level that's possible in the market. I've done data extrapolations. I've worked in the financial industry at very high levels, right? Just across the board. When I was 22 years old, I was a lead analyst on a $1 billion equity fund. When I was 22 years old, across the table from Harvard, giving Harvard Foundation the answers to what they would make on the deal. And they asked for adjustments on the equity fund, the $1 billion equity fund. So I'm working across the table from Harvard when I'm 22 years old, telling Harvard how much money Harvard's going to make on a $1 billion deal, right? I'm just out of Duke when that happens. I'm 22. So I have a ton of experience in the financial industry, guys. So looking at the framework of, you know, how do we put together an advantage in the market, we power through the data. We power through the, I'm just telling you guys, I'm not saying that to brag, right? I'm saying that to let you know that I'm an incredibly industrious person in terms of hard work ethic, guys, in terms of regard for the financial information in front of me. This is financial information, right? We're going to master this. We want to find our niche. We want to find our advantage. And you don't get across the table from Harvard at 22 years old and lead analyst on a $1 billion equity fund, telling Harvard whether or not they can or cannot make more money. You don't get there by chilling out, relaxing, and maybe I'll find the answer. No, guys. You get there by hard work. You get there by saying, I'm going to be the number one guy in this market, right? Period. That's how you get there, right? How do you develop the advantage, like to get that position at 22? I'll just tell you, how do you develop the advantage to say we're going to have the top trade group? Same attitude, period, guys. Same attitude. And just to let you guys know, that's just a little bit about me. That's just kind of how I started in the financial industry. So just It's a what is it? It's a very aggressive market, more so than you know in terms of operation of financial or capital markets, guys. Extremely aggressive in terms of being competitive, and the slough falls off. Right, the people who don't want to compete, they go away. A lot of them want to participate and they don't make it. They don't make the cut. So when we talk about levels of persistence or energy that we try and consistently create, what we'll say is just that it's all with the notion that we try to establish a market advantage through patterns, through review of classic TA, and through paying heed and attention to the markets. Okay, price action, right? In terms of diligence and focus, the more of it that you have in the market, the better that you'll do. The more discipline and focus that you have, guys, disciplining, and we'll say consistency as well. The more discipline you have, not only in terms of your approach to the market, but also in terms of how much you're going to put on each trade. One of the most important things as you look at being a trader, guys, how much money are you going to put on each trade? Yeah, discipline, guys. How much money are you going to put on each trade? What's your win rate? What's your payout ratio? Simple stuff like that. And we'll get into some additionals like that once we get to the point where VIP are telling me I can book 4 trades anytime I want to. Yeah, you guys know this. It's just that consistency, guys. It is a it's nice, guys. That's what it's all about in the market. Just knowing you can show up and bring your advantage to the market at any point in time, deployable at any point in time that you choose, guys. A time and place that you're choosing. That's the idea. That's what we're developing in VIP. So what I'm going to say is, you guys know this. It's like, is it going up or is it going down? Man, we trade. We need volume. Boom. This is attracting attention right now in the markets. I'm telling you, this ascending triangle is attracting attention. And to the extent that you guys are looking to trade, guys, I know you'll be in the back. I'll be in the back with you. I just wanted to come for a bit. I know it's Saturday night. It's always a light crowd because it's Saturday. It's a little bit later, but that's okay. I just wanted to make sure that you guys know the 1 hourly is a hot topic, and just know what we're up to in VIP. Know what the goals are. Numero unos. Yeah, we want to be numero unos. That's it, guys. That's the bottom line. I want to shout out to Frankie. He's coming to mind. What's up, Frankie Pathfinder? The whole crew, guys. We're just excited about 2022, and yeah, just hopefully a little bit of inspiration for you guys as we get into the residual. This week's going to be interesting, guys. New home, or what is it, existing or new home report, sales reports coming out Monday. Right, so I'd pay attention to that. That's a little bit of market news to the extent that we decoupled a little bit last week. BTC seems a little bit slow right now. She seems slow because there was a big rally towards it. Last week was a nice rally, guys, for equities, and BTC just kind of hung out. Just decided to kind of hang out. We weren't too. We had some issues. You guys know this technically with BTC, so it didn't really surprise us that much, although it felt like we were left out in the dark. It's like, come on. So to the extent that we're just kind of sideways now, we've been in this range. Let's just measure this. We've been in this range for 7 days. For a week, we've been in this range. Okay? So it's understandable. You want some price action. We want to trade, and you guys know we are. That's the bottom line that we saw in the last 24 hours, guys. Some great trades, VIP, etc. Shout out to Freddie. Shout out to Bill. Bill, what's up? You doing well? And when I see your pictures up there, like J Mac now, I shout out to you guys when I see your picture. I'm not always looking at that screen, so if I forget anybody, that's nothing personal. You guys call me, you text me, you do something. Text me. Shoot me a text message. Kent Gifford, shoot me a text message, man. I want to know what's going on. So in terms of the guys, in terms of the essentials, it looks like we are having a little bit of a drop frame. So I will get back to you guys in the back. This is London with Bitcoin Spike. And yeah, we'll probably have to reset my connection, but maybe all for the better. We'll go back.